It's been a tough market for financial stocks in general, so it makes it even harder for a company that is new to the public market. Carlyle is looking to raise over $700 million to retire some debt. Francis, you really don't like this. You know, I look at the company and I applaud them for being able to make a lot of money and pay their partners a lot of money, but I agree, I don't understand quite why they feel the desire to go public.
Well, what they did is that they took an investment from Dubai, from the oil sheik in there in 2007, and they refinanced that. And then they borrowed about $500 million to pay out those guys for a lot of their equity and subordinated debt interest. And my thinking is, if Carlyle is such a great deal, why do those Dubai people want to? Why did they bail out? So I'm not really sure about that. The other thing is the CEO is prancing around saying they're going to be selling at a discount relative to the other alternative investment bank and investment managers, which is Blackstone and KKR and Oxford and Oaktree. And what they did is they had $862 million in distributable earnings for 2011, and that's what you look at, kind of the payout ratio. And I'm sure that was goosed up for the IPO. I'm just really sure about that. But if you take that and put that over the market cap, the payout rate is 11.2%, which is way above the other companies in the class. And I just don't think that's sustainable. I don't think it's recurring. Also, GDP growth was only 2.2% in the March quarter. It's a kind of a flat economy. I think the heyday of these alternative investment managers is basically over. And I guess one final thing on Carlyle is they trumpet around their assets under management that increased to 147 million from 106 or 10 million for 2010. And that's due to an acquisition. That's not internal growth. So they've always been kind of the bridesmaid. They didn't make it in 2007. They didn't make it last year when Apollo came. They're late here with after Oaktree, which tanked, was a disaster. I wouldn't buy Carlyle.
Then we have Everbank Financial. We haven't seen too many banks hitting the IPO market. So when you take a look at this one, is this a good bank for people to get involved with?
Well, I know there's some interest in it. I know there's some people like it. I don't like it. What they've done is they've gone around and acquired distressed portfolios, and they also acquired other financial institutions. And if you look at their financial statements, it's confusing to me. They reported for 2011 net interest income before loan losses of 406 million, and they also have other income of 224 million and other expenses of 554 million. I'm not really sure what those are. They're not explained in the S1. I don't like people to hide things in the S1. I don't see the internal growth, and I wonder why the other bank in Florida, the Bank United, wants to be sold. I think the same problem that Bank United has with regulations is going to also apply to Everbank.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're getting